What's up, everyone? Okay, so tax season officially kicked off, and I'm seeing a lot of confusion out there. People are asking me, why is everyone talking about bigger refunds this year? What actually changed? And should I be excited or worried? So today, I'm breaking down everything that matters for tax season 2026. No fluff, no complicated jargon, just the real information you need to either maximize your refund or at least not leave money on the table. And trust me, after watching this, you're going to understand this tax season better than 90% of people out there. Before we dive in, quick question. Have you filed your taxes yet this year, or are you still putting it off? Let me know in the comments because I'm curious where everyone's at. All right, let's get into it. So here's what's happening. We're now in the 2026 tax filing season, which means you're reporting income you earned in 2025. The deadline is April 15th, and the IRS is expecting around 164 million returns. That's a massive number. But here's the thing. This isn't just another ordinary tax season. This is the first full year where the One Big Beautiful Bill Act, which was passed in 2025, is actually in effect. And whether you care about politics or not, this law changed a lot of things for everyday taxpayers. Some of these changes happen automatically. Others, you have to know about them and claim them yourself. That's the difference between getting everything you deserve and walking away empty-handed. Now, you've probably heard people talking about bigger refunds. The Treasury Department is projecting that the average refund could jump by about $1,000 compared to last year. Last year, the average was around $3,100. So this year, we could be looking at $4,000 or even higher for many people. But hold on, before you get too excited, let me explain what this actually means, because most people get this wrong. A bigger refund doesn't mean you made more money. It doesn't mean the government decided to be generous. What it actually means is that you overpaid your taxes throughout the year. Here's how it works. Most of you probably didn't change your tax withholding in 2025. Your paycheck had the same amount of tax taken out every month, just like in 2024. But the tax law changed. Your actual tax bill went down because of new deductions and lower rates. So you kept paying at the old, higher level, but you actually owed less. That difference is what's coming back to you now as a refund. Is that a bad thing? Not necessarily. Some people like getting a big lump sum. It helps them save. But technically, you're giving the government an interest-free loan all year. If you'd rather have that money in your pocket every month, you should adjust your withholding. We'll talk about that later. Okay, let's talk about the changes that are affecting almost everyone. The standard deduction went up significantly. If you're single, it's now $15,450. If you're married filing jointly, it's $31,500. Head of household filers get $23,625. Now, about 90% of taxpayers use the standard deduction, so this affects almost everyone watching this video. What this means is simple. More of your income is protected from taxes. If you earned $60,000 last year as a single person, you subtract $15,350, and only $44,250 is actually taxable. Less taxable income equals lower taxes, which usually means a bigger refund if your withholding stayed the same. This is one of those automatic benefits I mentioned. You don't have to do anything special. It just happens. Now here's where things get really interesting, especially if you live in a high-tax state. The state and local tax deduction, also called SALT, was capped at $10,000 for years. A lot of people in states like California, New York, New Jersey, Connecticut, they were getting crushed by this cap because their property taxes and state income taxes are so high. Well, that cap just jumped to $40,000 for this tax year. That's a massive increase. And it stays elevated through 2029 before dropping back down. Now, there are income limits and phase-outs for higher earners. But if you're someone who pays significant state and local taxes, this could completely change your strategy. For the first time in years, itemizing your deductions might actually save you more money than taking the standard deduction. Your tax software will help you compare, but pay attention to this. Don't just click through without checking. This one change alone could be worth thousands of dollars in extra refund money for the right people. If you have kids, there's good news here too. The child tax credit went up to $2,200 per child under 17. A portion of that is refundable, meaning even if you don't owe much in taxes, you can still get it. Look, $2,200 per kid isn't going to change your life, but when you're juggling daycare costs, groceries, gas, school supplies, everything adds up. And this credit stacks with other things like the Earned Income Tax Credit and the Child and Dependent Care Credit. So if you qualify for multiple credits, it can make a real difference. Now, if you're 65 or older, or if you're helping a parent or grandparent with their taxes, listen up. There's a new senior bonus deduction that a lot of people are missing. If you're 65 or older, you can get an additional $6,000 deduction on top of the standard deduction. If you're married and both of you are 65 or older, that's $12,000 extra. There are income limits, so not everyone qualifies, but for retirees living on Social Security, a pension, or IRA withdrawals, this is huge. It lowers your taxable income, which can also reduce how much of your Social Security gets taxed. That's a double benefit that people don't always realize. This is a new one, and it's getting a lot of attention. If you work in a job where you earn tips, or you work a lot of overtime, there are new deductions for you. For tips, you can deduct up to $25,000 of your tip income if you're a single filer. There are income phase-outs, so check if you qualify. For overtime, the deduction applies to the premium portion of your pay. So if you get time and a half, it's that extra half that qualifies, not your base wage. Now, is this perfect? No. It adds some complexity. You need to make sure your W-2 properly breaks out your tip income and overtime pay. But if you're a server, bartender, delivery driver, or someone working extra hours, this could save you real money. All right, let's talk about the actual process of filing. First thing, file early. I know it's tempting to wait, but the earlier you file, the faster you get your refund, and the easier it is to deal with any issues. The IRS is still dealing with staffing challenges and system upgrades, so things can get backed up later in the season. Second, use e-filing and direct deposit. Paper returns can take weeks or even months. E-filed returns with direct deposit usually process in about 21 days, sometimes faster. And by the way, paper refund checks are being phased out anyway, so you need to set up direct deposit if you haven't already. Third, the IRS Direct File program isn't available this year. If you used that before, you'll need another option. Free File is still available if your income is under $89,000. There are also volunteer programs like Vita for free tax help. Here's something important. With all these new rules and deductions, accuracy matters more than ever. Take your time. Double-check every entry. If you're using tax software, don't just rush through the questions. And if the IRS sends you a letter, don't panic. It doesn't automatically mean you did something wrong. They're just verifying information. Respond quickly and through official channels only. Don't click on random emails claiming to be from the IRS. That's almost always a scam. One last thing I want to mention. If you do get a big refund this year, that's great. Use it wisely. Pay off debt, build an emergency fund, invest it, whatever makes sense for your situation. But also think about adjusting your withholding for the rest of this year. You might prefer having more money in each paycheck instead of waiting for a lump sum next year. It's your money either way, but timing can make a difference in how you manage your cash flow. Look, I know taxes aren't fun. Nobody wakes up excited to file their return. But understanding what changed this year and knowing what you qualify for can literally put thousands of dollars back in your pocket. That's worth paying attention to. I'm going to keep posting updates as we move through tax season. If you have questions, drop them in the comments. What's confusing you? What do you want me to explain? Let me know and I'll address it. Thanks for watching, and I'll catch you in the next one.